2 things. That's all that one of our most experienced prop traders focuses on to find profitable trades day in and day out. In this video, you'll learn these 2 things in exact detail. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City since 2005 and proud to develop numerous 7 and even 8-figure per year traders. Watch, take notes, and learn from a professional trader on our desk so you can grow your trading account.
Today, I'm going to let you in on a concept that has made a huge difference in my 5 years as a trader at SMB. Outside of risk management, which is our #1 job as traders, we're diving into the only 2 things you really need to focus on during the trading day: catalysts and setups. In the second half of this video, I'll also show examples in greater detail directly from my personal chart archive. We'll conduct a bar-by-bar analysis of recent trades. I know many of you have been asking for more bar-by-bar videos, so we will do a deep dive into trades from this month, January 2024. This exercise will tie everything together, so make sure you stick around for that. When day trading, focus on catalysts. Many traders out there think a catalyst must be some big headline that's reported all over the news, like CNBC or something like that. But that's not true. A catalyst is any event that brings volume to a stock. It's what gets a stock moving. For successful day trading, focus on stocks with catalysts as they promise movement and activity. Catalysts in trading are like the spark that ignites a fire. Let me break down the various types of catalysts you should watch out for. An unusually good earnings report can trigger significant price movements. Better or worse than expected guidance updates act as a beacon for bullish runs or breakdowns. A new product announcement creates buzz and draws in traders. A move into a hot new sector can lead to increased buying pressure. Collaboration with an established company boosts credibility and stock price. Favorable government regulatory announcements impacts entire sectors significantly. A new large contract, cost cuts, which provide an immediate positive impact on the bottom line for the company. Analyst upgrades spark buying interest. Macroeconomic news influences the broader market. Management changes signal strategic shifts. Dividend announcements attract income-seeking investors. A significant legal patent. Major shareholder changes. Breakthrough research or clinical trial results. Merger and acquisition news. Company restructuring announcements. Insider buying activity. And finally, a technical analysis catalyst, such as a stock that's overextended to the upside or downside or a higher time frame breakout, is a catalyst in and of itself. So there we have 20 different types of catalysts. If you think of more, comment below, but I'm pretty certain I got them all. Now that we know our catalysts, we need a setup. This is the pattern or strategy we use intraday to execute our trade idea based on our understanding of the catalyst. Here are just some of the setups we use to execute trades here on the trading desk at SMB. A back through open, which is ideal for both bullish and bearish moves. Opening range breaks indicate range expansion when tied together with RVOL. This is an excellent strategy to pair with a catalyst when you have a tight range off the open. Mean reversion, great for overextended stocks that begin to fall from recent resistance levels and vice versa for the long side. Consolidation breaks. Look for a consolidation, breakouts and breakdowns for a continuation in the direction of the trend. FRD, or first red day, targets overextended stocks for a short that break the prior bar's close for the first time after a big run up on the daily. VWAP continuation capitalizes on strong trends after a healthy pullback to VWAP. Blow off tops or capitulation bottoms help us execute our mean reversion ideas. Gap and go, or opening drive after a gap up to a key resistance level on positive news. Gap give and go, same as the gap and go, except you get a pullback into a key level before the run. These are just a few setups that I've traded recently. There are many more, and each of these strategies has many nuances around them. If you're thinking of a new pattern to trade, I would just challenge you to find 15 to 20 examples of that setup in action. Then go back and study what all the best ones have in common. Those are the nuances that you need to look for intraday if you're considering putting on significant risk in the setup. Now we combine catalysts and setups. In trading, the magic happens when you combine a solid catalyst with the right setup. Imagine leveraging an opening range break with a positive earnings report or a mean reversion strategy after a favorable regulatory announcement on a beaten down stock, or a gap and go into a bigger picture all-time high breakout. This synergy is key to successful day trading. All right, let's dig into some trades from my personal chart archive where we'll match a catalyst with a setup and go into detail. So today, which is the 19th of January, we had a huge trade in SMCI. It was an all-time high breakout, but it's set up as a gap give and go or a back through open. So yesterday after the close, which was the 18th, SMCI, which is a hardware company renowned for its association with AI, delivered a huge upside pre-announcement for the second quarter. They now project EPS between $5.40 and $5.50, significantly exceeding the street's expectations of $4.55. Additionally, their revenue is estimated to reach $3.6 billion and $3.65 billion, surpassing the street's forecasts of $2.82 billion. In addition, SMCI is holding above all its key moving averages on the daily chart. You can see this support here around 240, and then we see a low, a high, a higher low, a higher high, a higher low, a higher high, a higher low, and now we're breaking out to all-time highs. Okay, so we have a very bullish daily chart setup. It's breaking out of a 6-month base on this news, which is a guidance pre-announcement. We're looking at yesterday after the close, which is the 18th. We see that announcement, and the stock shoots up from 310 to 330. Now, if you're at your desk, I'm sure you could hit into some of this, but really, I think it's going to be pretty hard to catch this with size, just given how thin and wide the spread is on a stock like this. However, there is a valid setup for a long once the stock consolidates for about an hour and then breaks through that initial reaction high, that little resistance there at 333. Ideally, you would scale out of some of this, but really it sets you up for a great swing trade from good prices. That's not the trade that I want to focus on. I want to focus on to the intraday setup. So off the open, we get this pullback into pre-market lows, which is right around 340. What I noticed on the tape was that the stock was really struggling to break down through that pre-market low. And through tape reading, I just noticed that 340 continued to reclaim, and that happened for about 2 to 3 minutes. It could not get momentum going through that pre-market low. Finally, the stock pushes up from 340 and breaks the opening price. This is a very clear setup that we call a back through open. So we're looking to play this higher time frame breakout to all-time highs that's based on this really good guidance update, but now we need the setup. We need the setup to get involved in our long idea. That's the setup, the back through open. Ideally, you enter, and what you could do is you could implement Lance B's famous 2-minute bar trailing stop that'll get you out right around here at 380 for around a 30-point gain. Now, since this is a higher time frame breakout to all-time highs out of a 6-month base on this exceptionally good news and guidance update, we want to try to hold a piece for a much bigger move since this is a bigger picture trade. Now, you can see how well the stock held the 9 EMA. I found that really strong stocks intraday will hold that 9 EMA. So a better reason to sell that swing that we have on could be when the stock begins to hold under that 9 EMA. In addition, it's really important to put the magnitude of this volume into perspective. Off the open here, we have the bar threshold, which was set at 66,000 at the time of the trade. The first 2-minute bar's volume is 6 times the threshold, which is set at 3 standard deviations from the average of the last 10 days worth of 2-minute bar volume data. Also, after the first few minutes, SMCI was doing 80% of its 30-day average volume. Now, if you don't have any fancy indicators to really show you how great the volume is, you could always just look at RVol, which was 17 off the open, which is just massive for a stock like this. That's just one example of pairing a catalyst with a very specific intraday setup. Let's dig into another one. Now we'll get into a market trade using Tesla. This was a higher time frame breakdown, and it's set up as a VWAP continuation. Now, here's a visual showing the relative weakness in Tesla relative to the Qs. And you can see that highlighted there. Tesla slowly moving lower as the Qs and the NASDAQ bounce. Relative weakness. In addition, in the morning of the trade, Tesla had a negative headline where the Hertz CEO is planning to sell 20,000 of their EVs. Now, we'll take a look at the Qs. After a hotter than expected CPI number, the market sells off at 8:30 after the CPI, but ends up rallying back, puts in a double top, and starts to fail. In addition, I got an email that traders who bet on futures that are tied to interest rate cuts are now pricing in lower odds of a rate cut in March. The NASDAQ tick is also struggling to get above zero for the first half hour of the day, which could indicate a potential trend day. Now that the overall market is showing signs of weakness and we have a negative catalyst for the market, this puts a relatively weak market name like Tesla in play, especially when it's trading under that higher time frame support, which you can see right here at 230. So we have a higher time frame breakdown setting up. It's also getting below this 200-day moving average. So off the open, Tesla is opening up below the 200-day moving average. And off the open, it fails through our last higher time frame support at 230 on decent volume. Again, Tesla is also relatively weak compared to the market off the open. So that theme of that relative weakness is there to stay. Tesla pops into that 230 level. It also pops into VWAP. It also pops into that 21 EMA, which is that pink line you see there. And it's struggling. And then we break this smaller trend, and it sets up for a short here, and it sets up as a VWAP continuation. We get a first move down on high volume. You can see that threshold there. We have almost a 3 million share volume bar off the open to the downside. Through that 230 level, we have a bounce. Can't break highs, struggling to get back above that 230 level, breaks the trend and starts failing from VWAP. This is our entry short, and we're expressing this breakdown trade, this higher time frame breakdown, as a VWAP continuation. Take the short, and as Tesla starts to come into 226 and makes a new low, you see that 226 level is holding, and we get a strong push off. That was my take profit. Mostly because Tesla moved one ATR from its prior close, and given that RVol was only a 1.2 at this point, we can't expect much more than a 1 ATR move. And it's showing signs that it's about to hold and bounce. Now we'll quickly go over a breaking news trade in DocuSign. On January 11th, news broke in Docu. Reportedly, Bain Capital and Hellman and Friedman are both interested in acquiring DocuSign. When the news hit, we see volume 4 times above that threshold that I spoke about. Also, this volume sustains, which is a great sign for a breaking news trade. Whenever we're trading breaking news, we want to see volume sustain. Now, ideally, you have some sort of third-party news provider that, either a squawk like Trade the News or a tweet deck that'll have this news pop up for you right away. When you see that, you want to enter in as fast as you can and accept the risk to the undisturbed price. That's the key for a breaking news trade. If you're early to the news, you get in and you need to accept the risk to the undisturbed price. The stock should not get back below that price. Again, using our trailing 2-minute bar stop, it gets us out at 61.20 for a $1.80 gain. Now, let's take a look at an opening range break on Peloton. On January 5th, Peloton gaps up into the 660 resistance in pre-market, threatening a potential breakout. After news and high volume on day one. Peloton short interest is also 14%, so there's big squeeze potential here. Now, the day before this trade, Peloton signed an exclusive partnership with TikTok to bring their workout content to the TikTok community. This is the first time Peloton will produce bespoke content for a partner outside of their own Peloton channels. Now, let's take a look at that day one move. It has a gap up, holds the gap, holds VWAP throughout the afternoon, and then closes at the top 20% of that intraday range, which is very bullish for a gap up and a continuation on day two. So now we're eyeing this stock for a second day trade, but how is it going to set up? That's the key here. We can't just say we're going to look for a second day trade and have no idea of how we're going to express that idea. A second day trade is very general. We need a specific setup to get us involved in that. So in the pre-market, you could see that test of 660, that higher time frame resistance level. And now we have that confluence in the pre-market and the higher time frame, which makes that level super robust. It's good to note that Peloton was doing a big percent of its 30-day average volume in the first few minutes. Off the open, we see a dip, we see volume moving lower and fizzling out, and then we see a break back above VWAP on high volume above our bar threshold here. And what happens is it gets back through VWAP and gets back through the opening price going green on the day. Now, you could take the trade there, but I think the higher quality setup is the breakout of the opening range through 660 on volume. That's what we call an ORB, ORB opening range break. Given the volume, we could enter in with a stop below the breakout bar, just a few cents below, and look to ride that momentum. Remember, each trade is unique. It's about blending catalyst-driven momentum with strategic setups. May your trade setups be well-timed and your catalysts be compelling. Take care and thanks for watching.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.